The biggest IPO in history is happening on June 12th. With this IPO, SpaceX is going to raise around $75 billion. That is nearly 3 times the previous record set by Saudi Aramco. And at $1.75 trillion valuation, SpaceX will become the 11th largest company in the world. In this video, I'll break down how SpaceX actually makes its money, the key risks you need to know about, and most importantly, is it actually a good deal or not? Let's not waste any time and let's jump right in. Alright, the first thing you need to know is that SpaceX actually consists of 3 totally different businesses. The first one is connectivity, aka Starlink. The second one is space, which is rocket launchers, Starship, and all the cool space stuff. And the third one is AI, which covers XAI, Grok, X, and all the compute infrastructure powering them. And only one of them is making money right now. In 2025, Starlink made $11.4 billion in revenue and had $4.4 billion in operating profit. This gives it a healthy 39% operating profit margin. It now has 10.3 million subscribers across 164 countries. And by any standard, this is one of the fastest scaling telecom business in history. Meanwhile, the space segment lost $657 million in all of 2025, then burned through another $662 million in just the first 3 months of 2026. That's because space stuff is expensive, or more specifically, space R&D. In 2024, SpaceX spent $1.8 billion on Starship R&D. Then that cost almost doubled to $3 billion in 2025. The bet here is that Starship will eventually make launches cheap enough to unlock entirely new markets, whether it is point-to-point cargo, lunar missions, or even Mars. However, that payoff is likely to be years away. But thankfully, while the segment is bleeding money, government contracts can potentially help to fill in the gap. In fact, the US Space Force just handed SpaceX $2.29 billion to build a military satellite network for the Golden Dome missile defense program. On the other hand, the AI segment is a different story. Since the XAI merger, the AI segment has been losing $2 or more for every dollar it makes. In 2025, it pulled in $3.2 billion in revenue, but ended up making a loss of $6.4 billion. And a big part of why is the monetization gap. As of March 2026, Grok had 117 million monthly active users, and X had 550 million, but only 1.9 million of them were paying for the premium Grok subscription. That's just $365 million in combined X and Grok subscription revenue for all of 2025. Meanwhile, their capex was $12.7 billion for all of 2025, but had already hit $7.7 billion in just the first quarter of 2026 alone. That's more than double what the segment made in revenue for all of 2025. So when you add it all up, even with Starlink's profits, SpaceX still lost $2.6 billion in 2025. And in Q1 2026 alone, the operating loss had already hit $1.9 billion. Now, financials aside, there's another thing you need to know. When you buy SpaceX shares, you are a shareholder in name, but you have zero say in how it is actually run. That's because Elon Musk holds 85.1% of voting power, and it is structured in a way that his control will never drop below 50%. So the implication here is that if Musk ever decides to do something that could hurt you as a shareholder, like merging SpaceX with Tesla, or redirect resources to XAI or any of his other ventures, there's nothing much you could do about it. In fact, he has used this playbook before. When Tesla bought SolarCity in 2016, shareholders sued for conflict of interest and lost. Now, let's talk about the valuation. At $1.75 trillion, SpaceX is trading at 94 times price-to-sales ratio. This means that for every dollar of revenue SpaceX earns, you are paying $94 for the stock. To put that into context, it is even more expensive than Palantir, which trades at 61 times price to sales and is infamous for having one of the most stretched valuations in tech. And on EBITDA, it gets even harder to stomach. SpaceX has a 218 times EBITDA, which basically means you are paying for 218 years of profits today. Currently, there's no other public company at this size trading anywhere close to this multiple. Or in other words, SpaceX is going to IPO at a very, very high valuation. Aswath Damodaran, aka the Dean of Valuation from NYU, ran an analysis and got a fair value of $1.22 trillion. This will put the IPO at roughly 43% above what he thinks the company is actually worth. In fact, even XAI's own AI chatbot, Grok, said that it wouldn't invest in SpaceX at $1.75 trillion. Instead, it puts the fair value estimates at just $1.1 trillion to $1.3 trillion, which is roughly in line with Professor Damodaran's numbers. But of course, none of this is surprising. After all, IPOs, or what some people call is probably overpriced, are usually priced to benefit the company and its insiders, rather than retail investors who FOMO in. For example, Facebook dropped 55% after its IPO, while Saudi Aramco was flat for 6 years after it went public. In fact, according to a study which looked at nearly 1,500 US IPOs from 2012 to 2021, the average IPO underperformed the broader market by 16% to 19% in the first 3 years. Now, if you're wondering which companies sit inside the broader SpaceX story, Moomoo has an industry chain feature that maps it all out. Go to Markets, US, and scroll all the way down till you see Industry Chain. Tap on it and look for Commercial Space. Here, you will see the full commercial space supply chain laid out, from satellite manufacturing to rocket launch and downstream applications. And from there, you can tap into any segment to see which companies could potentially stand to benefit from the SpaceX listing. Or if you want to participate while managing risk, you can also head over to the investment teams and look for Space Team ETFs. Here, you can pull up any ETFs side by side to compare their performance, expense ratios, and holdings all in one view. And after SpaceX goes public, you can also track which ETF has SpaceX in it, so you know exactly where the passive buying is flowing from. New users who sign up to Moomoo SG will get to earn up to $1,200 worth of welcome rewards when you fulfill the terms and conditions, which includes a $100 worth of Nvidia shares exclusively for my channel. Plus, enjoy zero commission for US, Hong Kong, and Singapore stock trading. Simply follow the steps here and key in my promo code to get your exclusive reward. For more details, refer to the link promotion page in the description below. Now, with that being said, what if you still want to invest in a SpaceX story, but at the same time, you want to limit your risk? Well, there's actually a few ways to do that. And the first one is through ETFs. Check this out. The first two ETFs, NASA and RONB, are the only two ETFs here that already hold SpaceX right now. Even before the IPO, they pick it up through private placements. So you are essentially getting SpaceX exposure today. Though, because both of them are actively managed ETFs, you'll be paying higher expense ratios. Then you have got UFO and ArcX, which don't hold SpaceX yet, but will add it on around day 1 of listing. UFO is passive and gets triggered automatically once SpaceX meets the index rules. Meanwhile, ArcX is actively managed by Cathie Wood and her team, so they can just decide to buy it on listing day. And finally, there's ITA, the biggest of the 5. ITA has the $13.5 billion in assets, and because it's a passive ETF, it only rebalances quarterly, so you'll be waiting a bit longer to actually get SpaceX inside. However, it's also the most liquid and stable option of the bunch, with the lowest expense ratio at just 0.4%. But if you don't want to invest into some random ETFs just to get exposure to SpaceX, you could also look at some other companies that are competing for the same market. The first company is none other than Amazon. Amazon owns Kuiper, which is a 3,200 satellite low Earth orbit constellation that integrates directly with AWS. It is Starlink's biggest competitor. And unlike SpaceX, Amazon doesn't need your money to fund their space operations. That's because its existing businesses can already generate enough cash to cover the whole thing. And best of all, Amazon is one of the most profitable companies on the planet, with AWS and an e-commerce and advertising empire that prints cash, all at 19 times EBITDA instead of 218. Besides Amazon, there's also Alphabet or Google. Alphabet owns 6.11% of SpaceX from its 2015 investment, which would be worth around $107 billion at the IPO valuation. And with Alphabet, you aren't just getting SpaceX exposure for free, you're also getting the world's largest digital advertising business, Google Cloud, and YouTube. And on top of that, a stake in Anthropic, Waymo, AST Space Mobile, Planet Labs, and many other bets that could play out in the future. If not, the simplest play of all is to just do nothing. That's because if you already own ETFs such as QQQ, S&P 500, or a global index fund like VT or VWRA, SpaceX is going to find its way into your portfolio anyway. Nasdaq recently introduced a fast entry rule that lets mega-cap companies join the Nasdaq 100 in just 15 trading days of listing, rather than having to wait up to a year. This means that with SpaceX $1.75 trillion valuation, it will be added to the Nasdaq 100 within 3 weeks of listing. so QQQ holders will get it automatically, though it's expected to be a small initial weight of around 0.47%. As for the S&P 500, the rules are slightly stricter, but the index committee is reviewing them right now and is expected to announce a decision before the IPO itself. And if you hold a global index fund, SpaceX will likely be added at the next quarterly review in September 2026, about 3 months after the IPO. Either way, if you hold broad index funds, you are going to be owning SpaceX, whether you like it or not. In short, SpaceX is definitely an extraordinary company. But at a $1.75 trillion valuation, SpaceX is one of the most expensive stocks to ever go public so far. Personally, rather than FOMOing in on day one, I would rather wait and see how it plays out. But do let me know in the comments below. Are you buying on day one, or are you sitting this one out? Anyway, that's all for this video. Hope you found it useful. Like, share and subscribe, as I'll be posting new videos every week.